Like ideas are super cheap. Technology is super cheap. So why are you more likely to succeed than somebody else? You're probably not. You're probably like, I don't mean this to be like pessimistic, but you probably shouldn't be a founder. Most people probably shouldn't start companies. And the VC game is convincing lots of people to start companies. So statistically, it works out for them because somebody in there is going to do a really good job. But at the same time, it's like an unfair playing field that you get ahead if you can start a venture funded company, financially speaking. Like that's how the game works. And so you're probably going to fail, but you should probably try to do it. But I think you could just like not do it right away and learn a little bit more, potentially develop those relationships. And
David Cramer is the co-founder of Sentry, the error tracking platform used by millions of developers. He's also a high school dropout who taught himself to code and bootstrapped a unicorn by focusing less on hype and more on endurance. In this episode, we talk frankly about how venture capital really works, why most founders confuse technology with a business, how pricing mistakes nearly sink good companies, and why attention, not explanation, often drives growth. David doesn't smooth the edges, and that's the point. I'm Walter Thompson. This is Fund, Build, Scale. Fund, Build, Scale is for anyone who's interested in learning the basic skills required to launch a startup, secure initial funding, and transform their idea into a sustainable business. Get the newsletter on Beehive or LinkedIn, and subscribe wherever you get your podcasts. If you like what you hear, please leave a rating or review. David, thanks so much for taking the time today. I really appreciate it.
yeah, for sure. I'm excited for the chat.
So let's start with your own background. You dropped out of high school and taught yourself how to code, which is not the usual story for Silicon Valley companies. Where do you think you're different from, let's say, the typical Stanford grad?
That's a good question. I've met a lot of Stanford grads that have not gotten very far in life. So I think broadly speaking, there's like two major differences for me as a founder. I mean, there's sort of like your upbringing, which, everybody has some degree of nuance in their upbringing. And then also like I started the business when I was 30. So I think both of those are actually really important. But I think on the sort of upbringing and exposure and all these things, like, I come from a working class family. I have no safety net. And I don't think that is necessarily like a good thing in everything, but I do think there's this sort of, when you were out there, and there's lots of different variations of this, right? Like immigrants also have a similar thing often. You kind of got to figure things out. And I don't know, good luck root causing humans, like why they are the way they are, so I don't know exactly what shaped me. But I do know that if I wanted to access the things, like I had to create that access in life. And I don't think everything's been perfect. Like dropping out of high school, actually, I would tell kids like, no, stay in school. It's probably more useful. And life is long, but mine was just like, I didn't have a lot of structured upbringing. Like I also grew up in like a really dinky, like shithole of a town, frankly. So the education system was not good. Like for example, like I got in an argument with like my freshman year algebra teacher about you can't have a negative zero. And I don't even know what the conversation was about, but I do know she did not teach math the next year.
Did you break her?
And so I don't know, honestly, but I did go around to all the other teachers and I like showed them the test result. I'm like, do you agree with this? And I was like one of those rebellious kids. And I'm like an introvert, still am. And I think I just like didn't fit the mold of the system. And that's common, And then I think coincidentally, the internet was like a really fascinating day. And I liked video games and I liked online video games and I liked, chat rooms and GeoCities and all these things that were like blossoming on the internet. And I think just, right time, right place to some degree, fit the mold. And I do think the internet is still kind of that way and like technology is still kind of that way. But I think what probably helped me most from that whole thing, and this is actually kind of what I would see common in, I think most successful people, whether they come from, say, a Stanford or somewhere else, is like, you got to have something to prove. Like you need to chip on your shoulder. And if you're just carried through life and you don't worry about that, like you're not going to try that hard. And so like I feel better or worse every day. I'm like, oh, I've got to be like better than my peers, unrelated to anything about my past or anything like that. I just like feel like that like thing where I have to prove myself, And I've seen this out of like people who've gone through university and everything too. But I do think it is more common when you face like more hardships in life or you're more underestimated in life. And if you don't have the Ivy League or whatever that is, And obviously, like my career, even when starting Sentry, I already had like some good companies on my resume. If you don't have that, like you're very much like I must prove myself in every single way, but I still feel that way, like, and so, but I think that's like a really important motivating factor.
So before you launched Sentry, it was before it was a company, it was a side project. What was the shift that helped you realize this was a company, not just a side project?
It's a good question. I mean, I think I had bootstrapped a few businesses and they were generally like ads driven, which never started an ads driven business, unrelated to venture or anything else, right? It's just like, it's a bad business to be in. It's just not fun. It's hard to make money, etc. Um, and at the time, all I wanted them to do was pay for themselves because I enjoy working on things and I enjoy working on things that people enjoy using. And so Sentry was actually similar. But I'm like, okay, well, one, you can't put ads in Sentry. You could, but I mean, maybe we should try that. But it doesn't make a lot of sense, right? And so I'm like, oh, we got to do like a cloud service thing if we're going to monetize this. Or more importantly, to do the cloud service thing, we have to charge people money. And so day one, like Sentry was actually like there was no free plan when we started the business, the cloud service that is. Um, and I don't know that anybody really thought it was going to be hugely successful. We're like, okay, as long as it pays for itself, that's cool because we'll keep working on it. It's a useful project. Um, but then a couple of years went by. We had a bunch of people paying for it, small amounts of money, mind you, a bunch of validation, if you will. And I didn't know it at the time, but like we have like genuine, like great product market fit. And investors, by the way, clueless as well. So investors always clueless, but like especially clueless in this scenario. And it wasn't until like 2.5 ish, 3 years later when we made a bunch of money and we could safely, like myself and my co-founder who does the creative function, we could safely leave our jobs, basically match our salaries from like GitHub and Dropbox,
Hmm.
and just like work on our own thing. And then that immediately accelerated. Oh, we should raise money because that's what everybody does. And I think at that point we knew there was something there, but like it was still, I don't know, maybe it's the same, it's me, but like the chip on your shoulder thing, I was like pessimist. I'm like, yeah, there's like, we'll grow, but I'm not like, this is not going to be like a big business. It's not going to achieve that sort of, even when we raise money, it's like, it's not going to get to 100 million. That doesn't make any sense. Where like, when we were raising money, we were like 600K in revenue or something. So
I mean, was that because you just couldn't see? I hate that you couldn't see the forest for the trees, but you couldn't see the TAM in that far off horizon that the investors did, or what do you think was the gulf between what you were seeing and they were seeing?
I'm not sure the investors see anything personally. I'm sure some of them are smart, but I think a lot of this is sort of, I know a lot more now than I did 10 years ago. What I would say now is everything has a TAM and you just need to figure out how to capture it. It's pretty easy to find a market, right? And it's pretty easy to shape the product around a market. But when I'm targeting at the time, we're like seven or something, $7 a month, like not that much money. I'm like, yeah, okay. How are we going to get to 100 million off this? And the answer is like, you're not. Like you change the business to work around these different concerns. But I also think like we were pessimistic about how valuable sort of the errors thing was at the time because like we were at that time, we were maybe not the largest in revenue, but we were already pretty close to the largest. And that is not a good signal because there are like several other like copycat businesses, one that existed about the same lifetime as us, but then a few that were newer and venture funded. Um, and so we're like, yeah, Airs probably isn't going to be that like big of a business, but we can use it as a launch pad for something else that like pays the bills. And we thought that was going to be APM, which for a variety of reasons turns out to be the wrong investment. But then, surprise, like, Airs are $100 million business, which is and like hats off to anybody that achieves that. Like it is not an easy thing. And a little bit of it's luck that you picked the right market and the right product. Not luck that you did it, to be clear. But it got a lot farther than we had thought. And then, things that we thought were going to carry the weight just did not. So I think there's a lot more of a RNG random number generator in this than there is science and skill in a lot of cases. So
You said when you were first raising, you had no idea what you were doing. What do you wish someone had told you about how venture really works before you started on this path?
ooh. Yeah, so I remember early on, I went and I talked with some other founders. I'm like, how do I fundraise? Can you intro me? And then I got ghosted by like a dozen plus VCs. And I'm very vindictive. So I've never spoken to any of them ever again. Um,
You're
but
like you're like Arya in Game of Thrones. You recite their names before you go to bed every
yeah,
night.
I think it's like it's a small industry. And I'm like, they may not need me to ever speak to them again. But like, I just have to find the culture of this good. it's like an insider culture. And so it's like, to your point of like, if you had the undergrad professor that's like your angel, that's probably going to carry, the idea helps, right? Like everything's an access game. And this is why San Francisco is so valuable. People like to hate on it, but the reason SF is valuable is because the networks are here. And that's how life works, whether people like it or not. And so it was, I kid you not, like the 15th investor I talked to that happened to overlap with me at Dropbox, and they had joined Excel. Their name is Dan Levine. Great guy, very, very sharp. I'm like, hey, why didn't you reach out to me? And I'm like, well, it was that chip on the shoulder. I'm like, well, I didn't, I didn't know him super well first off, but I'm like, I didn't want to try to like pull a, hey, we work together Dropbox card because it just felt cringe. And he's like, no, that's what you're supposed to do. And he ended up investing. It was for him, it was a no brainer. He knew me, he knew what we were doing, he believed in the space, all this stuff, which I think the other investors were just not that sharp, frankly. And I mean, that worked, but this was like the big thing. I don't think I truly understood how much it was like an insider track thing. And so now I actually try to help people when I can. Where I'm like, look, I'm like outside, I found my way in. I have no ego about that. I don't give a shit. Like, and so it's like, if I can help, I will. Doesn't mean I can, obviously. But it also just takes like one way to break in. And this even goes like, you have a lot of these like really young founders. The best way to start a company that's going to be successful is to go join another company that's going to be successful. And then in the future, take all that learning, do a really good job there. Those people might invest in you. Those people would introduce you to the board. Like we had a couple folks at the Sentry recently that have been there 10 years. Two of my first hires, great guys, helped a lot at the company. They left. They raised money very successfully, like much more easily and much more successfully than I did. And that's the inside track. But that's fine. Like they've learned a lot. They're not young kids. They've been through this. They've developed those relationships. And I think that's what people miss about this. And I just didn't know because like the people offering me advice were frankly clueless. Like they had no idea how the system worked. And I still look back and I'm like, I'm shocked how little the founders I knew or that I talked to knew about how any of the fundraising, et cetera, like processes work. But maybe we were all like early career. It was just like I was more talking to my peers than I was like people that were like mentors, if you will. So
Okay, from a founder's perspective, what's one side of the game that we're all getting wrong? Something, a secret handshake that only they know.
I mean, it's a sales game first and foremost. And so you kind of like your first fundraise, it's a little bit tricky. You have no confidence unless you're already successful, and then it doesn't matter because it's not a hard name. But if you don't know what's going on, you don't know how it works, you're intimidated because like they have all the cards, maybe you need the money or you feel like you need the money. But then really at the end of the day, it's like they're trying to get the best deal out of it. And so they're going to play, it's like used car salesman. It's like the same thing, right? And there's people that you can go to, by the way, if you want to buy a used car that you pay a little bit of money and they're going to get you a really good deal. Some of this is like the inside network thing, but I'm like, that to me is like the founder relationship is like, you should find other founders that are worth their salt and that you've developed a relationship ideally, not like just cold founders, because most people are not going to help you. And that's the trick. But I don't know that there's like any secret to it. It's really just like, there's sort of a status quo of what goes on in the space in terms of valuations, whatever. You can't control that, generally speaking. So like right now, it's really common to have like a 20, 30 mil safe. Sentry's seed was like a 6 mil priced round. And so it's ludicrous in the grand scheme of things. But if you look at the market, it like financially still makes sense for investors, so it doesn't matter. But it's like, you can't control that. I can't be like, well, I want 100 mil safe, which is also insane. Like, but let's just pretend it was 2 mil. I can't be all of a sudden like, well, all the investments that everybody's making are 2 mil and I demanded 20 mil. Maybe I could right now because of who I am and what I've accomplished, but I couldn't have back then. And so you got to play the game and like just know what the market is. And people could tell you that if you knew what questions to ask. Mm-hmm. But if you find a good investor, they're just going to be like, they're going to play both sides for you. Like Excel, for example, has always been a good partner for me. It's why like I don't like investors, but I will always talk favorably of them because our partner's been great there. They've helped me from the founder angle as well as from, they've done very well for Excel too, to be clear. But it's win-win. It's like when I succeed, they succeed. And I think they very clearly understood that. And so I think half of this is finding the right partner, half of this getting lucky, half of it's who you know, all this stuff, What I will say is I didn't appreciate how important relationships were. Like I have a bunch of relationships with my like friends and peers, but I never like schmooze, if you will. Like I never network. I hate it so much. And now I'm like, ah, oh, damn, I should have spent more time doing some of that stuff. And I mean that today, not fundraising angle, from like the sales angle and all this other stuff, or like access, And so, I don't know, I guess like don't take things for granted, but it mostly just comes down to who you know, how you present yourself, how you sell yourself, confidence. Um, it's not as hard as you think, but if you have nothing to offer, you have nothing to offer. So like, I don't know, you got to work on that first.
I found myself at an event last night and I walk in the door and didn't know anybody there. And I'm just holding a glass of wine and I got to dive in and make those, conversations happen. What advice do you have for somebody who's coming from a technical background, trying to get entrepreneurial, and they find themselves in that situation? They're walk right into the room. They don't know anybody else. They're just holding their glass of Chardonnay. What framework can you give them that will help them get into that first conversation?
Ooh, that one's tough. I think broadly speaking, I really think, I mean, if you can get a YC or something, YC is like a really good launch pad. And so I think if you can get into those, which I don't know anything about, we've not done that. I would start there, especially if you're younger. I think it's like, if you're in this situation, I would never advise somebody to just like early career go straight into the founder thing. Once in a while, people succeed, but like once in a while, people that dropped out of high school succeed. Doesn't mean you should. It makes no fucking sense, right? And so I think it's like get the experience, meet the people, build a cohort. Here's a really big issue for founders, especially young founders. Oh, I can't hire anybody. Yeah, you don't know anybody. You maybe know some people you went to school with who are maybe talented but have no experience. I hired everybody I worked with that I thought was good, like day one. You know, you can't do that if you haven't developed a career. So I actually just think, like broadly speaking, people who want to start companies should just go work at other companies first and learn there and learn from the mistakes, most importantly. And then you're just going to develop those relationships. So you're not going to find yourself in a room where you just like don't know what to do. You're probably just never going to be in that room. Again, you want like the inside track on everything. Like there is no other version. Like investors look at basically all their emails and they will respond to some of them. But like, what separates you from like everybody else? Probably nothing. Like ideas are super cheap. Technology is super cheap. So why are you more likely to succeed than somebody else? You're probably not. You're probably like, I don't mean this to be like pessimistic, but you probably shouldn't be a founder. Most people probably shouldn't start companies. And the VC game is convincing lots of people to start companies. So statistically, it works out for them because somebody in there is going to do a really good job. But at the same time, it's like an unfair playing field that you get ahead if you can start a venture funded company, financially speaking. Like that's how the game works. And so you're probably going to fail, but you should probably try to do it. But I think you could just like not do it right away and learn a little bit more. And potentially develop those relationships. And there's even the conflict of like solo versus non-solo founding. I don't know how you would possibly be a solo founder. Like it's really like they say being CEO is the loneliest job, and CEO is a proxy for like the single person that drives most decisions in a company. Like, and I'll tell you, like we hired a CEO, but like I still feel the weight of the company on me. Like our CEO is great, but at the end of the day, I am most likely to do the best thing for the company in every single situation because I have the most to lose emotionally, financially, just like time investment, all these things, right? And that's like, and especially when you can't the people you work with, the people you hire, you can't really treat them as peers at the end of the day. And a co-founder, you probably can, because ideally you're in this for the same goal. Even if you don't have the same responsibilities in a company, you're still sort of tied up in this concept, right? And so I think that part is actually probably more important than anything else, is just really be thoughtful about who you bring into the company. And I would bring in people that you really want to spend a lot of time with. There's all these cliches people talk about, but people forget about them. Like it's like a marriage, right? My co-founder, wildly different than me. I'm like super aggro, like always on, nonstop, just like hypercritical. He's very, very just like calm, I would say. And I wouldn't say I'm not rational, but he's sort of like the cool headed guy that will come to the conversation, And I think that's good. But at the same time, I can talk to him about whatever. He's thoughtful about it. And so it makes a really good dynamic. And I think that's like super, super important. And so I honestly, I think a lot of people would do better, like spend time developing your network, which will happen implicitly when you work at companies, but also be intentional a little bit about it. Like find great peers that ideally you want to work within that. And ideally you can start the thing, with them. And it's likely some of those people are going to be connected to the venture industry and whatnot, because it's not that large, like it's a very, very small space at the end of the day, especially in San Francisco. And
Yeah.
SF's like way bigger than everywhere else.
A lot of things I see, and we talked about this a little bit, like people are, they're fundraising on like a business, but not necessarily a technology. And I'm not an entrepreneur. Like, how do you know whether you've got cool tech versus a business you can actually scale and have, a decade from now? What are some of the tells?
Um, I think you've got a business, and very few people in the world have tech that is worth fundraising over. And I think a mistake that both investors and founders have made is like, oh, I've got some tech. I see this a lot in open source. It's popular. I should go fundraise on it. You're not fundraising to build technology. You're fundraising to build a business, plain and simple. The day you raise money is the day you stop focusing on the technology. It's the day you start focusing on the business. And Sentry's always been this way. Sentry is not hard tech, if you will. We didn't build a database. We didn't build a crazy new paradigm of distributed systems, and most people don't. And so I think you just got to like anybody going into this should be like, okay, how do I build a business? How do I change an industry and capture value out of that change using technology, obviously? But it's not like who builds the best technology wins. Like Sentry's tech was probably better than all of our peers, but it doesn't matter. That's not what I want, you know? And I think that's really important. But again, I see this all the time. Like founders fundraise and then they spend their seed, and if they're lucky, their Series A, and they still don't figure out how to monetize. And I'm like, you're dead. Like you actually just lost all opportunity. Your company's literally dead at that point. You're never raising more without serious revenue growth, and you're unlikely to because you focused on the wrong things. Like clearly, you were like not the right sort of personality, I guess, or you didn't understand. And I actually wonder sometimes why VCs don't push people harder on the business side. Because Sentry was the opposite. Day one, it was like always like, well, we got to monetize this thing. And what drove us was not like the cool tech we were building. We wanted to build the best product, don't get me wrong, but it's like the things we looked at every day were not like, I don't know, pick whatever PMs might look at for KPIs. It was like, okay, what's our MRR number? What's the net customers that signed up today? What's churn? It was purely business numbers, which indicate product performance, but they don't indicate like technology performance, if you will.
Mhm.
And I think that's like the biggest issue. And I see this like nonstop everywhere. And I think it just comes down to like people just don't try hard enough. Like they don't try hard enough and they're not trying at the right thing. And again, I've raised money one time in life, several times, but for one company, right? And so I have very narrow experience on this. And so I don't know what it looks like, but all I can look at is like, well, why aren't people telling people that this is the job? It's not to build technology, it's to build a business, plain and simple. And then why are they not pushing them nonstop? Which seed, I think is fine. Seed, you're kind of figuring it out. But it's like, it's tough. And like, yeah, when everything's like happy go lucky, you'll get lucky, you'll raise money and maybe things will fall into place. But that is not an average that you can optimize for. And right now you see that in the industry, like it's getting harder to raise a Series A if you don't have a business back in it.
Mhm.
It's near impossible to raise money at all if you're not an AI company right now. And I don't know. To me, it's such an obvious thing when you say it out loud. I just don't see a lot of people saying like these kinds of things, or maybe I just don't hear it because I live in different circles or something.
Can you name like a couple of specific signals that showed you, oh no, this is not a project. This is actually a scalable business. We're going to build this and write this into the horizon. Like, was there a
Yeah,
moment, a day, or an article that,
no, I think it was just like we spun up the thing and it had organic traction. That's like great. We'll just keep building it and keep making money. I think fundraising was like a good validation moment for us that somebody saw something here, hypothetically, whether they did or not doesn't matter. But hypothetically saw it. I think it was probably even later than that, like because we had good numbers at that point. Like we had a lifestyle business, it was great. But like probably once you get to something like 10, 20 million revenue, you're like, holy shit, okay, there's something here. I will say like generally, you don't step back to see it. You're just like in it every day in the trenches. It's all incremental because it's not like overnight something happens. There is nothing overnight about anything. Like you'll hear this in some of these AI companies where like they have this overnight revenue growth, right? Which is insane to me. We haven't seen how that plays out. Like my prediction is like mass churn. And we do know that some of these companies struggle with retention in like very, very significant ways, like polar opposite end of the spectrum of normal SaaS metrics kind of thing. But if you take away those outliers, generally speaking, there is nothing that happens in overnight success. It's all very incremental. So you don't see it. Like there's not like one thing you did. Like once in a while, especially early days, or if there's big ops, you'll find some of that. Like we had a thing where shortly after we fundraised our seed, we were like, okay, now we got to like figure out how to like get people to grow on the platform, grow in terms of data they're sending us, which is like give them more value, charge them for that value, blah, blah, blah. And one thing we did, again, these are obvious things, is we were not telling people when they had run out of quota, which would cause them to lose all their data for the rest of the month. And so all we did was add an email telling them that they ran out of quota, and we like doubled the revenue like instantly. And it's like, yeah, we look like geniuses or something. And then we fundraised off of that, which is how you do it, by the way. Like you get one big win and then you go fundraise, and that's the game, and everybody knows that's the game. So it doesn't matter. The VCs know it, founders that know how to do it know it. And so that's it. But we fundraised our Series A off of that. And obviously, like, we didn't double revenue the next 3 months or something like that. It just went back to the normal rate of growth.
So you're just saying one actual spike on a chart that's enough to get you like past like a hurdle with an investor.
Oh, yeah.
One win, one quarter.
At the very least, it makes it a lot easier. Because it's also signal. Like I had this story from like a GCP sales guy. At some point where GCP wasn't sure if they could compete with AWS. And then I think it was Apple, they closed for like, I don't know how much money. I want to say 100 million, but that seems small scale on the grand scheme of the world these days. But it might have been 100 million, and they had never gotten a contract that big at GCP. And as soon as they got that, it's like, oh, it's doable. And then everything else became easier. It just became easier to get big deals because people had confidence, right? And I think that's the same thing. You're looking for that confidence that says you can do a thing. Mm-hmm. And if we found a lever that was able to like basically double the business really quickly, there's probably a lot more levers, right? And I think that's a fair bet just as much as anything else. It's probably a more fair bet than most things. And so same signal in all the things like, oh, you find like any big contracts willing to pay for anything, or you find a lot of customers. So we had a lot of customers always for Sentry. It's like, clearly there's market opportunity here, you know? And so it's just like figuring out how to capture that market opportunity.
How did you figure out your pricing early on? Because you said earlier you charge money, but not enough. How did you realize that? And what was the turning point when you kind of got your pricing game together?
We just kind of iterated, I would say. And so we didn't run margin. Like I didn't understand margins, to be clear, when we started this. I'm just like, we got to charge enough money to make money on the thing. I bet we had like a 10% margin or something like that. And at some point you recognize that that's not nearly enough to operate a business. Cause like we had to have so many customers at that 10% margin to even be able to employ ourselves. Right. And so we just kept working on that, improving the systems, improving the scale. And then we eventually just raised prices, generally speaking. Now, and we didn't raise it necessarily that significantly. We mostly spread out the value capture. And so at the higher end, we capture more value, generally speaking. But that's also where most of the volume and the customers live anyways, that are like real companies. Mm-hmm. But we did raise like the starting price quite significantly. It turns out if you charge $7 a month, you will never make any money in the enterprise software space. $29 a month. We make money on those plans, and we have a lot of customers that only pay us $29 a month. It's still a fraction of our total revenue, like a huge fraction or a huge small fraction, right? And so I think that part's particularly hard, but I don't know. You have all these consulting firms that do this. It's art plus science. It's a really hard problem to get right. We still struggle with it. We still make a lot of changes. We're going through this right now. It's even worse these days now with the LLMs because like the pricing is so insane and unpredictable, and everybody and there's no like scale. Like, you know, we'd always go back to cloud. Like, you can charge below target margins in cloud services because economies of scale will happen and that will play out. That's like a known phenomenon. People want to believe that exists with the models today. Doesn't exist yet. Hasn't existed yet. And so sure, the models are advanced, but the models aren't good enough to do what we want them to do. So the cost only increases right now. And so I think it's harder than ever to do price and impacting, but it's okay if you get it wrong. You can just fix it later. Like we just had a conversation internally the other day. We're going to like add this new thing that does like per user pricing. It's like an additional feature thing, but it's going to be charged per seat, which we don't normally do. And I'm like, guys, it's like team, like totally okay if we get this wrong. We'll just fix it later. It's okay. If our customers are not happy with that fix, they just won't pay for it. And that's also okay. Like it's always this thing of like, can you charge for it? And do they agree that the value is there to pay for it? And if they're not willing to pay for it, well, then you built the wrong thing, like, or something, you know? So it doesn't matter anyways. But people constantly try to give things away for free. And it's like, if it was valuable, it doesn't have to be free. But yeah, I think it's just like, you got to try and find the thing that's like unique to your business and make it work.
I mean, do you have any thoughts for a listener out there who's trying to monetize or thinking about monetizing their open source project? What's the smartest way to do that without alienating people who already like it?
I think monetization of open source is quite hard. And so Sentry was fortunate that we were naturally a cloud service. Like we were just a thing that people don't really want to host that just suits well. Easy to monetize that. And there's a bunch of reading I've done on my blog, like cra.mr, around how we approach it, our licensing schemes. Like we have the whole fair source thing. And it just works. I think if it's like, if you've got a random project like curl or an open source library, you can't monetize it. That's fine. Like some things, there are other ways to monetize. There are a few things that are venture capable businesses, and I think that's really, really important. So there are some things like there's Tailwind is a really good example. Tailwind monetizes by selling a bunch of pre-made templates, basically, like pre-made components. Not overly complicated to make. Is that a sustainable business? No, absolutely not. LLMs probably replace that whole thing. But that's fine. They've managed to do well with that monetization, and they've got to now figure out a future monetization strategy, which I'm sure they already have some ideas. They'll maybe work, they maybe won't work, but not a venture-backed business. No chance. It just doesn't make sense. Like if you do not have recurring revenue, you do not go raise venture funding. And so I think that's important because not everything needs to be venture-backed. Like Tailwind guy, I don't know how much money he makes. I'm sure he's doing fine in life. Laravel was very similar. Laravel's a venture-backed business now, but like they bootstrapped a phenomenal business, and so you can build great businesses without raising money. But I think open source is particularly tricky. If you can build a cloud service, great. If you can't, you got to ask yourself, is there a parallel value prop that can be offered? So the open source thing is still the open source thing. And you've got another thing that just like layers on top of it that adds more value that you can actually extract the value from that. That's kind of a more common model. Yeah, it's just hard because I think people sometimes think you can just directly monetize the thing that you're building. And that's generally where you can't in open source. Or if you can, why would it somebody else? And that was our fear. Cloud service makes this a little bit easier because we're not building a technology, we're building a service at the end of the day. But if you're building a database, you do not try to monetize the open source because you will lose. AWS will win, GCP will win, cloud providers will win, kind of thing, especially these days. And so I think there is no obvious answer to that question. But I do think there's a very important answer that is most things can and should not be monetized in open source because that is the nature of open source. But open source can do wonders for your career. Like my entire career is based on me doing open source. So
When we talked before, you described yourself as aggro and on all the time. How do you balance that without burning yourself out or the people around you?
I just don't. I accept that it has consequences, but I also accept that if I'm not, who will be? If I'm not like going to push the business to the extremes of what it can become, who's going to do that? No one. And I also recognize that like it is not a perfect thing, but I've come to recognize at the same time over the years that there is no better option that I've found at the very least. I'm sure you could approach it slightly differently, but like I think about this a lot because like say you hire a new grad into a company at Sentry stage. We're 350, 400 people, multi-billion valuation kind of thing. They are there for very different reasons than I am there. And that's okay. Maybe they'll stay and they'll grow, but like I am there because my entire net worth is in Sentry, as is almost my entire career right now, right? That creates a very different incentive for me than say a new grad, right? And I'd love if our incentives align, but they don't, and that's okay. And so I think about this a lot because I'm like, well, there are people that are incentivized to the same degree as I am, maybe not quite to the same degree, but executives are a really good example of this, where the compensation is very different, the asks are very different. I can actually treat those situations much more extreme than I can say the new grad. The new grad, I just want to be like, how do we make you successful? How do we get you to like max your output, do really great work? It's going to help you in the career. We want to reward you, blah, blah, blah. The executive is like, no, you are responsible to do this really well, period. Full stop. I have zero pity kind of thing. And that's been my balancing act. But I went through this thing because like you get such bad advice from investors. And so early days, investors and people in general, early days, I remember going through this stuff where it's like, oh, you should be like less in the weeds with people or something. You should manage more. I'm like, okay, I guess I should just manage more. There was a time where 2 days out of every week, I had back-to-back one-on-ones and I did nothing at all. What a waste of absolute time. literally zero value. But I would go back and forth on this. Like, am I in the weeds too much? Am I not in the weeds too much? And the reality is, like, again, go back to like, nobody's going to build this company other than the founders of the company at the end of the day. Like, and again, it's not a fault of anybody else. We have very different motivations. Like, I am so coupled to the success of this business in every single aspect of my life that I'm going to do unnatural things to make it successful in the best way possible. And so I just like, I've come to accept that. And so it's like, I will probably rub people the wrong way. The people that are there for similar reasons probably won't care. Like, yeah,
Mhm.
whatever. We'll have off days or whatever. It's like, yeah, we actually want to succeed. We're gonna like get into arguments sometimes. We're gonna disagree sometimes, and then we're gonna figure that out, and we're gonna continue to grow and succeed. The problem is when you go up against people that are not there for the same reasons, and so either new grads is fine, maybe they're still there for the same reasons, but they're at a different point in the career. But it's like when you have people that are, say, an executive, and they're not operating on like, how do we all be the most successful and just get over ourselves? They're not right. They're like, you should fire them. You should fire them immediately and never fucking wait ever. Um, and if you take away anything from this and you're a founder, that is the one lesson: is fire executives fast, because like they will. It's just a hard thing to unroll, and it's okay. It's probably your fault that you hired them. Maybe they're the wrong hire, maybe they're the wrong domain, all these things. But at the end of the day, if people are not aligned towards the goals, and our entire executive team is, and
Mhm.
so we've it's taken us many years to get like people that are really culturally aligned. But it's a really hard thing, and so I just accept it. It is what it is. And the people that want to succeed, they also accept it. We accept each other's like flaws and quirks, and we all understand people's motivations. And we all try to like imagine like we're all here for like to make the company successful. So that is what it is. And so I would encourage like let nobody ever tell you otherwise, because again, like people aren't going to build a business for you. They're not going to build a thing for you. You have to build it, and you're liable. You're on the hook. And hopefully, if you succeed, that's why you have so much equity in the company. So,
I live in San Francisco, and so I'm hearing a lot of conversations about this whole 996 workplace, people working from 9 to 9, 6 days a week, 12 hours a day. It's I used to work in startups, and so I have a different perspective on that kind of immersive living in a hacker house. Your boss is subsidizing your rent so you can live in a building with everyone you work with, and you're all a 5 minute walk from the office. I don't, for me, that doesn't seem sustainable for like the worker level, the worker bee. I can see why a founder who is all in and existentially invested in something, I can totally see why they'd want to do that. But for a worker bee, that seems like a bad bet.
I'm not totally convinced that it is really happening. I'm sure it happens a little bit here and there. And I would tell you, early days, you naturally do some of this, like um, in projects, in your own company and stuff. I don't know. I hear about this. This is a thing where I'm like, don't believe everything you read on the internet. I'm sure there's some irrational 3-person companies that are doing this, but I'm like, they're probably all motivated for the same reason. I agree. I would never ask like especially at our scale, like it's ludicrous to think this, but I would never be like, okay, new grads or anybody, to be honest with you, we're now 996. I'm like, I can barely get people to come to the office, which we mandate. And so I'm like, there is always a give and a take between the employer and the employee relationship. And some people just want to be employees. Some people want to be like co-owners, if you will, equity holders. There's a very different personality, different career ambitions. It's fine. It's totally okay for people to optimize around what they want. But again, like a founder is going to optimize very differently than a random person, let alone like a big company, right? And so I don't know. I'm sure some people do this, but some of these companies that claim this, I know people that work at those companies, and they certainly are not working 996. And I don't know how they would. Like some days I will put a lot of hours in, but it's usually because I'm intrinsically motivated and there's something clear that I'm working towards that I know how to achieve, right? And there are other days I'm like, I will be like, all right, one more meeting, I'm out for the day, I'm gonna chill, I need to unwind, and that's fine. Like that is actually work-life balance. It's not 9 to 5, we shut off, period.
Right.
Like that's bullshit. Work-life balance is just like figuring out, like, I don't know how to make them work. And for me, it was like, okay, a lot of my friends are my peers. I worked with them over the years, and like we can go out and grab a beer and talk about work, and it's totally fine. That's balance for me. And so I don't know, but again, I wouldn't. Who cares what the internet says? Like, use your brain. If you're young, some of this you haven't been exposed to, so you're like, you just have less to draw from. For me, I'm like, I just like you can kind of critically think through most things, right? It's like most or like simple math equations. It's like, okay, if we do 996 and we recruit somebody who wants to join a company like that, I already have to compete for talent, and it's already really hard. Do I want to make it even harder? No, that's ridiculous. And for what gain? It's like, So yes, I don't know. There's a lot of stuff. There's always stuff like this. There's probably more now than ever because it's really fun to just like hype shit. Like a lot of founders like think if they just tweet a lot of funny stuff, that'll make them successful. It doesn't, by the way. It has nothing to do with success. And so I just ignore it. It's a lot of noise. Don't ignore the technology. Ignore the random people saying things on the internet.
I might get that engraved on my next laptop. I want to spend the last bit of our conversation talking about kind of branding and attention and going to market. I used to work with Greg, who works with you. Greg had emailed me, and I was emailing him back about setting up this interview. And I looked up, and a minibus went past with a Sentry billboard on it. So yeah, I'm seeing your stuff all over town, and I kind of wonder how you feel about. You live in the Bay Area, you see these billboards that are just relentlessly one tech company after another. What's the value for you as far as getting Sentry up on these billboards, wrapping buses at bus stops? What's the utility for you? What's the actual ROI?
Pure brand awareness. So for me, marketing is three things. It's make them aware, then make them aware of what you do, and then capture the lead when the time is right. For us, billboards are step one. And they're fun. It's a culturally fun thing. Also, everybody sucks at them. I don't know if you saw this. We put up a billboard in Moline, which is where John Deere headquarters are. And it literally, it's kind of funny, whatever. And disclaimer, I talked to the CTO before we did this. I casually mentioned we had this idea. And so I didn't think he would be offended, but we put up a billboard that just says, Jamie, you told us this would work. And it's got the Sentry logo in like a field with a John Deere tractor, and it's on his commute to the office. That's awareness.
That is awareness marketing. Yeah.
Yeah. Dirt cheap, by the way, and super fun. And I'm sure, hopefully the people at John Deere find it fun too. And that's it. Like it's fun. It's interesting. It's expensive. You don't have to do it in an expensive way. Like we did our open source pledge things, which were like these like just gruesome faces that were things, and it would say like chief excuse officer. And it was designed like, what if we did activism as advertising? Because it kind of works here and there, And then the first one that I think, again, it's designed to be fun and rent free. Everybody knows rent free from the internet. The goal is rent free for step one. That's it. I want to be in their head. It's not free because I had to buy a billboard or something, but like that's what we're trying to do. So the first ones we did were it was a minotaur, like the mythical creature that is like
half man, half horse.
Yeah, but it's like stands up, right? It's got like a VR headset on. It's supposed to be playing Beat Saber, and it just says Sentry can't fix this. And you're like, if you're in like marketing, if you will, you're like, well, how does Sentry make money off that? And the answer is we don't. That's not the purpose. We're not tracking leads or conversions of that billboard. But you're asking about it. That's how we make money off of it. And we had so many people doing that. And they were so good. Like, and that's what we try to do now. It's really hard, by the way. Like achieving that like attention thing, very, very hard without offending people. And you don't want to offend people, right? You can kind of offend ideas. There's like there's a line there, but you definitely don't want to offend people. And my favorite analogy here is if people really want to go deep on this is like, look at Liquid Death. They're so good at this. I admire the shit out of that company. It's unbelievably good from a sort of brand marketing. And that entire company is just a marketing business. It's like an agency that happens to sell like canned water, right? And I'm pretty sure they make more money than us still. Like it's a phenomenal company.
It's almost like performance art, actually, the way I see it. It's like it's like a Warhol kind of like a, comment on consumerism. It's hysterical.
It's phenomenal. It's fun. Like you think about the things you go to your job for, and it's still a job for me. I still have to work every day, right? It's not like, oh, work is just fun. No, it's still work. Things like this actually make it like really fun. It's like creative aspects and stuff. And we've got a great illustrative team and all this, a great creative function in general. And so it's like, yeah, we should do things like this. We have a full-time person on staff to do merchandise as an analogy. We're like, how does that make business sense? It doesn't, let me tell you. But it does from a brand and from a set yourself apart from what other people do. And that's the game. Is like, how do you stand out from the crowd? And that increasingly is becoming more and more important,
Are you working with an agency or is this all in-house?
It's all in-house.
Are you the creative driver behind this or who's your team?
I do some of it. I would say on a lot of brand, I am at least the decision maker on if we're going to do it, if it represents our brand, if I want to care on the consequences or not. And some of them are my ideas. They're often like it's a collaborative thing, even if it comes from me, though. It's like, let's riff on something and see. But I'm usually like the buck stops with me kind of thing. Like I'm usually the decision maker on it. So
Any suggestion for a listener out there, a founder, technical founder, not a PT Barnum marketing type like you are, obviously, and they have zero public presence. What is one like low cost, high impact thing they could do to kind of establish themselves or start establishing themselves? Posting on LinkedIn, cranking up like
yeah,
memes on Twitter. What do they need to be doing?
I think it's tough because it changes. I truly believe it changes. And it's kind of marketing in general. All what I can tell you what I did, and people can take that for what it is because it may not work these days. My early career, I just liked sharing my work with people. I was in IRC, which for the youngins is kind of like Discord, but it was a Discord that wasn't operated by a single company. It was like almost like open source Discord. But I was in these internet chat rooms with community members. So Django was a big Python web framework I was a big part of. I was always in these channels talking to other people. And I was going to those conferences and talking to those other people. This part's easy to, you can do this still today. So, and then eventually, like I would blog about stuff I was working on, or I would speak at conferences about stuff I was working on. I wasn't going to demo the products I was being paid to work on. I'm like, oh, I made this random open source product that we use or something. I just open source it. It's cool.
Mhm.
Or, oh, Apple updated Mac OS and I hit this problem and here's how I fix it. It's like a blog post, right? That's it. I would just share my work. And that built my career. Like, and that's fundamentally all it was. But over time, that graduated to like I was doing keynotes at all these Python conferences. I've like traveled like many interesting places in the world that I never would have gone to by being an invited speaker in the Python community. It was great. I would not do that anymore today because it's very time consuming and a pain in the ass, but it was fun at the time, you know? And all I did was like talk about random things I was working on. I'd talk about like, oh, I worked at this company called Discuss, which we did like this comment widget. We had pretty big scale at that period of the internet. So I just go talk about like all the like ways we duct tape things together to make it scale more, you know? And that is like, no matter what, I promise you, people find your work interesting, especially if you work at a true technology company, because that's not most of the world, you know? And that was it. But it was just like shared learning, shared experiences. And I try to do that today. Conferences are still like a great avenue. If you're in the JavaScript scene, I highly recommend something like React Miami or Render Atlanta, ATL. I've not been to Render, but I hear great things. There's a few others. It's kind of hit and miss depending on your circles. SF has a ton of AI stuff going on now, which has been like really cool and interesting.
Mhm.
But yeah, literally, it was just like sharing my work. But obviously, like what's changed is there's a lot of new channels, YouTube, TikTok, which makes no sense to me, but it's a thing for some companies. Instagram, I don't know, Thread, like all these different things. Like Twitter is a good one for me, for example. Will it be good for you? I don't know. It might be, it might not be. But I think it's got to be genuine and it can't be artificial. I just wanted to share my work, which meant I shared work in like a genuine, good way. Like, good example, the last piece I'll put on this is like marketing, DevRel, all this stuff. You can have a blog post. You got to ask who that blog post is for. If it's a bunch of paragraphs about words, it's not for an engineer. So if I'm trying to like talk to engineers, why is the first thing not shown on that just source code?
Mhm.
Like technical speak. Like, why is that not the entire thing? You know, like that's the delta between marketing and sort of this thing that it like represents a brand. And that brand is represented in Sentry at the end of the day. I'm not saying we're perfect in all this, but like what you see generally from us is often me. Like our corporate brand is often my personal brand. It's what I think is right, what I think is true. And it's why, for example, we make fun of ourselves because I think it's like, you know, it's like the maybe we don't quite have confidence that we're as good as we are or something. Or it's why we just have this weird dry sense of humor, or why we try to be super authentic and not take ourselves too seriously. That all comes from like me at the end of the day. Not that other people aren't on the same page, but it wasn't like randomly in a room we came up with like, this is the most clever way to do marketing or brand or whatever. It's like, no, that's just like kind of the culture we built and who we are and what we believe in and stuff like that. And that's all you got to do,
You do some angel investing, correct?
sort of. I do a bunch of angel investing. I'm trying to do less of it, frankly, because there's just like too much going on and it's not a cheap hobby, if you will. So
Okay. I mean, I was just, we don't have to, okay. Like I'll leave it alone. We can just cut that part out. Actually, it's fine.
it doesn't matter.
Okay.
I've done a lot. I have on the order of 100 investments over like 5 years. So
Well, I guess my question is this: if you could, and I hate these questions, but they're kind of useful. If you could give potential founders one sanity check before they approach an angel investor? Like, what would that one thing be?
I don't know. That's tough. Um, because like I think for a lot of angel investors, we wrongly try to invest into ideas, and that's not the right way to do it because usually ideas are bad or they don't work or they're not thought through, and that's totally fine. Um, I honestly don't know because when I look at my investments, the people that have succeeded either were kind of obvious they were going to succeed because they had some network or they had some prior experience. Usually it's mostly that they had prior experience for what it's worth, statistically speaking.
Mhm.
But then like it'll be somebody where I remember there's one I invested into and the call was so bad. It felt so scripted, like such a like fake hustle. I'm like, this is so bad. And I don't even know why I said yes. I think I'm just like, whatever. I'm just going to do it. It's a small amount of money. They're doing well. They're not like one of the best in the portfolio, but they're probably top 15% or top 10%. Whereas like bottom 50% will never make any money whatsoever at minimum kind of thing. And so I don't actually know what the right strategy is, especially on that lens, let alone from the inverse, right?
Mm.
But I do think you be authentic. I don't know. Like imagine I get probably no more or no less than two pitches a day now. It's gotten quite insane. And I just like, I don't even want to read them all. It's not even my job. I got other stuff to do that's way more important for me. And so I
Right.
just kind of ignore half of them. And the ones that stand out usually are because I know the person, I've interacted with them, um, or they got an intro through somebody else that's really, really important for what it's worth. Um, and I don't know. I'm sort of just like vetting on like, well, do I think like you have a reasonable chance you're going to try hard at this? Do I think you're like, you understand the game enough? Which usually means like if they came through a friend, especially if it's like an investor, I'm like, okay, well, they probably understand the game a little bit. They managed to get that far. But I don't know how you stand out if you don't have any of that access. I think you got to go through somebody and somebody's kind of got to give you a chance, if you will. It's early career. It's the same thing as any other thing. Somebody's got to give you the job, so you can grow from there. So
Okay.
it's hard. I don't know. It's like take your shot. That's the best thing I can say.
If you were interviewing for a job with an early stage startup, what's one question the CEO would have to answer before you could take the position?
So if I was trying to get the job, like if I were on the candidate side,
Right.
um, I don't know because it's like I didn't really interview much, and I'm not sure how I approach it today if I did it. I do think I'd want to understand. Actually, I'll give you an analogy. I declined joining a high-profile company when I was leaving one of my early jobs. Um, and I thought it was going to be really interesting because they use the same technology stack. I liked Python at that time, and I wanted to work in Python. They're in the same office building. I had contracted for the company many years prior, and so I'm like, oh, there's a bunch of these like good things going on, and it was in a space I liked. It was like it was a social network at the time, and I'm like, oh, that's fun to work on. And I went and talked to them, and I'm like, well, how are you going to make money? And that was very reactive for me at the time because our business, the one I was working at, was just like we were struggling to monetize in any way that mattered, which matters a lot. Again, like going back to like you're building a business, like not technology. And their answer was so stupid. It was like again, social network day. It's like we're gonna sell stickers, like digital stickers. I'm like, really?
Like,
Really?
why not
No,
magic
like,
beans? Yeah.
yeah. And so it's like that was one. And I was already like, there's no chance. And then I forget it was after, but I had another meeting. I don't know in what order. And then it was a technology thing. It was like with the technology leader. And I was an avid hater of a specific database at the time, which has gotten better, but it was MongoDB. It was just early days. It was a really bad database and was marketed too well, if you will. And they used it. And the technology leader's like, oh, I know you dislike MongoDB, but like, we're willing to like switch, database providers. I'm like, what is wrong with you? Like, this is not how you make rational decisions in a company. Like, what, you know? And so, but I do think that business thing is really, really important. And I think these days I'd be like, well, how is this going to be a big company? Convince me, you know? And I think it's a fair question to ask. Anybody ask me that Sentry, I will have a completely logical and clear answer of exactly what won't work, how we iterate on it, how we get there, what the market opportunity looks like, who the competitors are. I will give you everything about the space. And you either believe me or you don't at that point. But you will not believe that I don't know what I'm doing. You will believe I am an absolute expert on everything I've said. And so I would at least, especially at like a level that I would like, I guess if I went into a business, even as an IC or anything, the prestige I would bring or my skills or something, you can demand that kind of stuff. Your early career, whatever. Like you almost don't have the right to ask that, to demand that, if you will. I think it's still fair to ask for what it's worth, but I do think that's really important. Everybody's building a business. How's that one going to be better? You have a lot of places you can work at. It's like you have a lot of time in life, but it's still limited.
David, thanks for, I think, what probably is my most candid episode of Fund, Build, Scale ever. Great conversation. Thank you for the time today.
Yeah, thank you. This is fun.
The Fund, Build, Scale theme was written by Michael Tritter and performed by Michael and Carlos Chairez. Michael also composed Ocean, the track you heard at the top. If you enjoyed the episode, please subscribe and leave a rating. It helps more people find the show. You can get the Fund, Build, Scale newsletter on Beehive, follow along on Instagram, and if you have a guest suggestion or a question, reach me at fundbuildscale@gmail.com. Thanks for listening. Fund, Build, Scale is a production of Truth and Soul Media, LLC.